Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, September 5th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, what is the current state of the U.S. labor market? And what is the current state of the Japanese labor market? Our answers are the JOLTS report, jobless claims, non-farm productivity, and unit labor cost data were supportive of our resilient U.S. economy theme. The latest Japanese wage data were supportive of our China eases, Japan displeases theme. If USD and JPY money markets are in the area code of correct with respect to their respective next 12-month outlooks for the Fed and BOJ policy normalization, the pace and pain of yen carry trade unwinding may surprise investors over the medium term. The resiliency of the U.S. labor market and likely reacceleration of U.S. inflation over the medium term suggests the presence of two-sided left tail risks relative to our expectation that the Goldilocks versus deflation debate will be resolved in favor of Goldilocks after some seasonal and pre-election volatility. Yen carry trade unwinding equals deflation. A hawkish rate repricing in the U.S. equals inflation. We view the inflation versus deflation debate, which are two risk-off market regimes, as a bigger risk for 2025 than between now and year end. We still think investors should buy near-term dips in anticipation of a year-end performance chase. Macro fundamentals are likely to be far less supportive from there, however. Transitioning to our 42 Macro dashboard, as always, we'll wrap up with a question from our community. This one's not really a question, but I thought it was funny, really interesting and awesome to share in the context of the really, incredible learning that we're all experiencing here in this community. One of the things we pride ourselves on and have prided ourselves on since the beginning of launching our firm 3.5 years ago was the melding of the institutional investor sort of cohort with the retail investor cohort. To my knowledge, I think we're the only firm on earth that sells the exact same research to the best buy-siders in the world and to the least sophisticated retail investors in the world for the same price. No change in price, no change in what they see, no change in research. Everyone gets the same signals, the same research, the same data, all at the same time. Which is something that I think we're really proud of because we are truly, committed to democratizing access to, world-class macro risk management procedures and processes. And so, going back to this community chat feature here, which we have thousands of investors all interacting with me and with each other, one of the things that I'm really proud of is how much I learn from the investors in this chat and how much the investors in this chat learn from each other because we have so many smart people from different fields and all across the global buy side, educating, retail investors and educating each other about, what's happening. And one of the things that I learned today, which is probably the most intelligent and really impactful thing I've learned about the AI super cycle that we're in, which is about the productivity impact for AI. And so I'll just read this, it's not a question, I'll just read this comment from one of our clients. It says, hey, everyone, I watched the Darius's interview with Pomp this week, and at the end, they talked about the potential impact of AI as an impact of productivity gains. At the start of this discussion, they mentioned that Amazon used their own AI to upgrade their servers to the latest version of Java. That process would have taken 4,500 developer years. Instead, they were able to do it in 50 developer days. So I'll correct the person. We didn't talk about that in the discussion with Pomp and I, but this is something I'm learning this morning, and that's an enormous time save. And obviously, AI has thus far had a much bigger impact in the developer community in terms of writing code and generating applications and whatnot than it has for the broader economy. But if this is the kind of productivity enhancement we're seeing already at the kind of forefront, at the vanguard of AI development, at some point this will trickle down into the broader economy, and obviously the productivity gains associated with that could be very impactful and could be something that would allow us to continue having this economic expansion in the absence of inflationary pressures that would ultimately cause the Fed to send us into recession or be forced the Fed's hand on not sending us into recession. We ultimately think that the Fed does not want to send the U.S. economy into recession, and they will settle for above target inflation rather than a recession. But again, I don't know if market participants broadly are aware of that at this point in time. Just given the reaction that we saw to the June jobs report in late July, in late July and early August. It was the June jobs report in early August. July jobs report in early August. My apologies for that. So again, I just want to wrap up just by saying, there is a tremendous amount of learning going on in this community. One of the things that we pride ourselves on is that there are no, there's a very safe space for learning. There really, in the years that we've been running 42 Macro, I think I can count on one hand the number of negative comments that have even been made. We've had to fire one of our thousands of clients for making negative comments and just being really harsh to their fellow members, throughout theirs. But one person out of several, thousands of people, in my opinion, just shows you the kind of community that we're building here, which is no frills, no nonsense, all learning, all kindness, all generosity, and we're really proud of what we built here, and we're welcome each and every one of you to come join us when you see fit. So we'll wrap it up there. Darius Dale presenting our Macro Minute for Thursday, September 5th. 2024. Super pumped about tonight. You got Mahomes versus Lamar back on primetime television. Fun fact, 94 of the 100 most watched television events in the U.S. last year were NFL football games, and 3 of the last 6 were college football games. So this is a country that is founded on football, and we're really grateful for that, because it's one of those things that binds our countries and our communities together. It teaches young men and now young women on the sidelines and in flag football, how to work together as a team. And it's really something that, I'm really proud of, from my background, that's really helped me tremendously throughout my life. So I'm excited to turn TV on tonight and get it cracking. So we'll see you guys. We'll catch you back here tomorrow. Everyone have a wonderful day.